Have you heard of stop hunts in the market? Have you seen massive explosive moves just completely reverse positions? Have you been looking for stop hunts, or have you been a part of a stop hunt where your position gets nuked before you see that large move? Stop hunts are generally these large movements in market price that's triggered by multiple different stops being hit from large traders or even retail traders. So what I'm going to be breaking down is actually how to find these stops with trapped traders to be a part of the larger move and not actually the people who are getting stopped out. So what we're going to be looking today for is trapped traders that will trigger a very strong stop hunt that reverses the market, and an amazing opportunity for you to be a part of not getting caught into these traps and outsmarting retail. So if you guys are super excited for that video, welcome to TRADEPRO Academy. Welcome to the channel where we talk about everything's futures and the markets. So get ready for this intro, get excited, because we're going to be breaking down how you can stop getting stop hunted and look to be the stop hunter. So first and foremost, we got to talk about trapped traders. What is a trapped trader? A trapped trader is known as absorption in the futures market, in the general market in essence. Absorption or trapped trader is someone who is caught out selling into lows or buying into highs while the market is no longer moving in that direction with size. It could be larger positions, medium positions, just throwing in larger size at a low without anyone continuing the movement to that downside, right? Eventually allowing big buyers to step in, strong-handed buyers using that liquidity to actually reverse price and kill the stops of whoever's been shorting on the way down to turn prices back up. Right? The same is true for people buying into highs without any real volume or anyone wanting to buy even higher, right? This often turns into a massive reversal. And what I'm going to show you guys today is how to find those trapped traders and how to locate where their stops are for those massive stop hunt moves that everyone wants to be a part of, right? We even have multiple examples of us doing this live in our trading room, so stick around for those as well. Now, what we're going to be using for this is the depth of market, right? We're going to be using order flow to break this down and identify where these key players are, because this is the best way to actually identify where market buying and market selling enters and exits the market to create large moves or no moves at all. If we can read order flow, we know where prices want to go based on market orders flowing in, right? That's the whole premise of it. Sounds elementary, right? Now, we've done a lot of videos on the depth of market and on the DOM at TRADEPRO Academy. You can scour our YouTube channel. We even have a free futures course that's on our website available for you guys to break this down on a higher level. But to break this down fully, what we're going to have to do is jump into the screen on the computer so I can show you guys how this stuff works and how we can find trap traders and crush some stops while we're at it. So I'll see you guys back behind the screens, and let's do this. All right, now that we're behind the screen, we can focus on finding these stops and understanding these trapped traders. So what happens generally, right? Let's review some of these concepts before we dive into this too much. What happens generally is that we get this large move that starts from here, and you can see where we start running down, and you start to see rotations. Now, a lot of traders are looking at these rotations into these lows and thinking, oh, okay, well, that's it, that's the bottom. And maybe some people have been buying all the way down, right? Now, the thing with this whole concept here is that at a certain point, right, most likely, you're going to start to see people that are selling into lows, right? And those sellers that come into lows can no longer push prices down. That means that no one's selling lower and lower, and generally what happens here is that it's a decent size of cumulative quantity, but it could just be a lot of people getting very late on the trend, and this allows for buyers to actually find these areas, use them as liquidity, step in and get that large push to the upside. So if we take a look at the concept of stops here, right? It's pretty difficult to find the lows, right, until we start looking at order flow and seeing where people are trapped. But as we go down, right, we have a phenomenon that we can call cascading stops as a general basis. Now, these cascading stops are from, in this case, short selling positions that allow prices to push lower. So people enter into massive shorts, let's say over here, right? They put their stops above here. Every time we push lower and lower, right, there could be more traders that open positions up, right? Let's use an X for positioning. Let's say they open positions, and these are their stops. They open new positions, they move their stops, but now there's more players, so there's more stops that are being had, right? They come in, they add more, they move their massive stops lower and lower and lower. So they add more maybe over here, and then they have this huge stop block that if this gets hit, it's going to trigger a pretty strong market reversal. Now, finding these stops, right, is one thing, but it's a difficult aspect. I think the easier part to begin with is starting to find where traders are actually getting trapped, right? And then we can find where their stops are. So, little hint to finding stops, right? If we're not super versed in reading the order flow in the DOM, we can use a little cheat code as to where we have large delta, right? This large delta, especially negative delta, right? Negative 1,000 cumulative, negative 2,000 cumulative, whatever the case is, right? As long as prices are underneath, there's going to be continuation to the downside. However, when you start moving back above, those are the stops of traders that are getting hit, right? So when we look at this, we want to do a little quick review on the DOM. You guys can go and check out our intro videos on the depth of market on our YouTube channel. But generally speaking, the DOM is split up into a few categories. These middle columns over here are the market sells, right, and the market buys. What's important to understand here is seeing how these market buyers and market sellers actually interact with one another. Because, yeah, it's important to read these large orders, right? You look at things like 300 or 400 market orders plus, right? There's a setting to actually change the timeout of these. But you look at these orders that are generally this big and higher, right? You want to see how they interact with buyers and sellers. Because if a seller sells 600 into a low at multiple levels and it can't go down, and a buyer picks up 800, 400 and it shoots back up, these guys are actually getting trapped into this low, and you can see that reversal, right? So these are very, very important columns to see how prices react between market buyers and market sellers. Now, we also have delta here that allows us to see the net difference at a level between buyers and sellers, the ask minus the bid, right? So, for example, we take, let's say, this area over here, right? And we have 950 minus 750 market buyers versus market sellers. That's going to come up with a certain delta reading, right? These areas, I'm doing a replay on this. That's why these numbers might be a little skewed compared to what you actually see. But what we have generally is you do buy side minus the market sell side, and you get your delta regions. Another thing that we do need to note, right? How do traders actually get trapped? What is it that causes a trap? So, like we said, there's going to be a lot of selling into a low or a lot of buying into a high that doesn't allow prices to push down or push up. So how can that be seen on order flow? Now, we identified the sell columns, and we're looking at price as it drops. So into the sell columns here, what we're going to notice is large quantities of orders, right? And I mean like 1,000 plus on a timeout, on a 3-second timeout, let's say. 1,000 plus orders, if they come into a low, right, and they cannot go any lower, then that's probably a stuck trader. Now, the caveat behind that is these stuck traders are not stuck unless someone actually bids into them on the rebid for the reversal. You got to keep that in mind. Another thing is you can notice where these guys are getting trapped a bit better with delta, because delta stays fairly stationary without these numbers jumping up and down in the middle columns here. So if you have like a negative 2,000 delta and prices can't go any lower, right, that suggests that you're probably going to wait for someone to rebid this to trap these shorts and open up that reversal for that stop run to the upside. So why don't we play this replay, and we'll see how this shapes up here. We've noticed that into the 29 right now, we have this temporary low. The delta's pretty large. It's not crazy. It's in the 600s here after we got that nice little pop. And what we're watching for naturally is these middle columns, how they shape up. But right now, if we pause this quickly, yeah, okay, we pulled back down. But I'm not seeing necessarily anything that's would be considered a trapped trader, right? What I see here in consideration of these market orders is there's fluid large selling as prices continue dropping lower, right? So that's what you'd expect to see. As long as prices continue moving lower, right, step by step on these larger sells, 200-300 market orders, you'd expect to see the continuation, right? Until you get some kind of a bid that shows up. So let's pause this quickly here. Now, what we've noticed here is multiple hundreds of lots of sellers, right? 4, 5, 6, 500, right? Multiple thousands of lots at 3 levels around the 26. So this is a lot of selling into a low, and prices actually reverse a little pop. It's nothing crazy on decent buy side. Now, for a rebid to be qualified against traders that are potentially trapped, I want to look at speed and reaction. How quick can it go up? And how far can it go up on larger quantities? So if we go up like 1 to 2 points on larger quantities with speed, you're starting to notice the confirmation of traders getting trapped, as well as a potential of a reversal. If we want to increase the probability of us finding a low and a reversal for a stop hunt, you want to see massive delta being imbalanced here, right? Massive sellers into lows, and then the bid come in. The bigger the imbalance, the easier it is to actually read, right? So there's a little pop. What we've highlighted now is 26. I'm not saying that there's a really big imbalance down there just yet, but I've highlighted that this is an area where sellers are getting into large quantities and buyers are reacting every time we pull down, a rebid comes in, right? So let's see. We want to watch. We want to see how these sellers continue to react, right? Buyers keep stepping in. Sellers right now, they're not necessarily loading that big of size, and you get a nice little pop from 25-ish, 26-ish, now 29. So when I look at this, right, I can eagerly jump into this trade, suggesting that I could place my limits at 26, 25 to buy, right, based on the information that I have. But I wouldn't consider this the highest probability trap trader / stop run available, right? What we've done is we've also started to accumulate larger negative delta that's holding prices out around this 30, 32 area, right? 35 area, you can see up here. So those are the stops to be ran. When prices start bidding back above these areas, right, those are going to allow for stop runs to the upside. So we've identified where the stop runs are going to happen, but, right, to be a little more confident, we can also identify where the expected low is. Because if I buy, for example, at 29, right, and it comes down to 23, I'm risking 6 points for, right, maybe 6 points of profit because there's a lot of resistance at that 35. So keep that in mind. So we saw the momentum move of sellers getting pushed aside into this 25, 26, right? We're coming back down to the level to see if there's anyone actually holding out this sell. So large sell quantity again, and all of a sudden, this is interesting, right? Let's pause this. This is very, very important. Someone's selling not only thousands of lots into the low with larger individual quantities, but someone's selling 1,900, right? I'm rounding up into this low tick of 25. Now, a lot of you might be thinking, that's it. That's our trap trader. Let's get rumbling, right? Let's start buying this thing. There's two things to understand here. When someone sells that much quantity into a low, there's a very high probability, 80-ish%, 85%, that we run a little lower and potentially get a bid that traps them, right? So if you see this at a literal low tick, there is a good probability that's retested and the auction's cleaned up before we get the move back up to run the stops, right? Obviously, the second part of this is you need massive, massive buyers, 877s coming in, to swing this up aggressively to confirm that these guys are trapped. So careful getting head faked by this large move, right? Oftentimes, you do get a little pop, maybe a point or two to the downside before you get the reversal, right? There are times where that just trades and you get the pop and you're trying to scramble into the long position. So let's see how this plays out. 2,000 into the low, 1,000 trying to buy here. Someone trying to sell a little more above it, right? The 1,000, 1,200 trying to buy. Now 400, 500 is trying to buy. Still large negative delta here, 2,000 lots. 900 trying to sell, 1,000 trying to buy, 500 trying to buy. And you're sneaking up, right? You're sneaking up. So in this case, right, we could start maybe opening up a feeler long into this area. However, the thing that you have to understand is you're probably better off allowing this to fill, head fake under, get a real strong bid to come in, and then get long into this position, right? This is where you find traders that are actually getting trapped based on order flow, and you can locate where the stop run is going to happen based on that. So this alone is going to be fuel for the beginning of the move to actually run the stops. Now, you can find areas on large negative delta that have been holding resistance around 30 and 35 to add fuel to where these stops are hidden. So if we use our cascading stop rule, realistically, you can see the delta here visualized. There's going to be a lot, right, of movement to the upside realistically, probably into these like high 40s if we can cross that large negative delta. There's some negative delta around 30-ish, 32 that could start the next stop move. But right now, what we're focused on is trying to find where these guys are sincerely trapped, right? So if I look at this time down when we sell into it, if I want to be a trader that's looking for better qualification confirmation, I'm going to wait for these guys to actually fill under, then bid, then I'll bid with them, right? So let's see, right? We filled one here on our imaginary little replay trade. And then look, they keep selling into the slow, allowing for the reactive buy to open up. Now look, this right here, this is perfect. We trade 2-3 ticks under, and we bid right away. We bid right away back above the area, right? You get a lot of traders in the short down here. You get some solid buyers. Now I can confirm and maybe throw on full size onto this position, trying to fill around that 25. Because look at the reaction from that thing, right? The reaction on that bid allowed us to identify that these guys they're really stuck, and we're going to open up that stop run, right? 27.75 as well, very large delta there. You start running through these large delta areas, that's going to be your stop run move, right? These are the trap traders. So you can find their stops based on this because people are selling into the low. That suggests that they have stops to buy prices back above certain levels where large deltas are most likely currently holding resistance. So it's around 30, 35. They place their stops there, and once those stops are a hit, right, they're out of the position and they're buying at market, showing, right, market participants that there's a lot of buy pressure in this market, not really knowing that there's stops, which allows for price to continuously go higher. Prices get imbalanced to the buy side when these stops, these buy stops on short positions are ran, and this is exactly what we're looking for to find traders that are trapped and the positioning of their stops to run those stops, right? So we do this on a daily basis. We find these trades if they're there in our trading rooms, right? In our live trading room. So if you want to check that out, check out TradeProAcademy.com for our futures trading room. Now use this tool, study it, find it, observe it, because this can create a lot of opportunity in the futures market as a futures trader. Right? So how does this trade pan out? Let's just push this along a little more to fast forward prices, right? So if we fast forward these on the replay, you can see that these numbers are a little skewed. And let's clear that, and you can see we start moving above 30. What happens here, right? Stops are getting hit. And then we're going to start moving past that 35, 36. Let's see here, fast forward it, and those stops get hit. Boom, boom, we're into the 40, right? Stops are flushed. We're trading almost 20 points higher right now, right? And you can see that momentum move from trap traders and identifying where their stop losses are, right? What a positioning, what a run. So this is an amazing, amazing tool that can allow you to find not only reversals, but where traders are getting trapped and how to run stops so that you can understand where these stops are and not be a part of the trapped movement and the stop hunt movement. Turn into the hunter, not the huntee. So if you want more videos like these, you know what to do, right? We'll see you guys in our next video, and let's do this outro. Let's wrap this up. Look at my face a little more, and I'll see you guys next time. So I hope you guys enjoyed breaking down and understanding that key order flow pattern to actually reverse positions, find stops, and trap traders. And more importantly, not be on the trapped side of these things. A lot of people get late in on the trends and they end up getting stopped out along with these massive reversals, only to continuously get into the same position and lose a lot of money. So if I've done anything today is help someone actually realize you're getting hunted, right? And if I've done something even better, maybe I've turned you into the stop hunter. So if you guys thoroughly enjoyed this video, drop a like down below, hit that comment section, and if you're new to the channel, please subscribe. It does help us a lot, and I'll see you guys in our next video. Let me know what kind of content you want to see down below. Maybe some more order flow, maybe some more volume. You tell me.